Are you sitting down? Because we need to have a serious, heartfelt talk about your financial destiny. I am talking to those of you who are retired and those of you who are standing right on the precipice of retirement, looking out at the next 20, 30, or 40 years of your lives. Let me ask you a question that might make your stomach drop just a little bit. When was the last time you checked your Experian credit score? I hear it all the time. People come up to me and say, Susie, I am 65 years old. I paid off my mortgage. I drive a car that is fully paid for. I do not owe a single dime to credit card companies. Why on earth do I still need to care about a credit score? I am done borrowing money. Oh, my dears. That is a dangerous misconception, and it is a fear-based trap that could cost you thousands upon thousands of your hard-earned retirement dollars. You think that because you're transitioning into a phase of life where you are living off your nest egg, that the credit bureaus stop watching you? They do not. In fact, your credit score matters now more than ever, but for entirely different reasons than when you were 30 or 40. Back then, you needed a score to build your life. Now, you need that score to protect your life, to protect your cash, and to protect your freedom. If you decide to downsize your home, which so many of you are planning to do, and you choose to rent a beautiful apartment or a condo to eliminate the hassle of home maintenance, guess what the landlord is going to look at before they hand you the keys? Your Experian credit score. If your score has plummeted because you thought you didn't need credit anymore, they could deny your application, or they could demand a massive security deposit that ties up your liquidity. What if you want to switch your auto insurance or your homeowner's insurance to a cheaper carrier to save money on a fixed income? Insurance companies in most states use a credit-based insurance score. If your score is low, your premiums go sky high. You are penalized simply because you let your credit score die. And let's talk about healthcare. God forbid you or your spouse face a medical emergency and need to enter an assisted living facility or secure long-term care services. Many of these facilities check creditworthiness during the admissions process to ensure payments will be made. Do you want to be facing a health crisis and a credit crisis at the exact same time? No, you do not. So today, we are breaking down the Experian credit score ranges once and for all. We are removing the mystery, we are confronting the fear of the unknown, and we are going to give you the exact steps to keep your score in the stratosphere where it belongs. When you look at your Experian report, you are primarily looking at a FICO score model, which is what 90% of top lender. Experian divides this 300 to 850 range into 5 distinct categories. You need to know exactly where you land right now because your category determines how the financial world treats you. The first range is 300 to 579. Experian labels this as poor. If your score is in this range, you are in a financial red zone. Lenders see you as an extreme risk. If you can even get approved for a loan or a credit card, you are going to be slaughtered by astronomical interest rates and buried in predatory fees. If you are here, we need to take immediate corrective action. The second range is 580 to 669, which is considered fair. You are out of the absolute gutter, but you are still skating on very thin ice. You might get approved for credit, but you are going to pay a heavy premium for it. You are not getting the best deals, and you are throwing money down the drain on interest that should be staying in your retirement account. Then we hit the sweet spot. The third range is 670 to 739. This is labeled good. The national average FICO score in America floats right around 713 to 715, so being in this range means you are keeping up with the pack. You will qualify for most loans, and you will get decent terms. It is a safe place to be, but it is not the best place to be. The fourth range is 740 to 799, which is very good. Now you are talking. When you hit 740, you are entering the upper echelon. Lenders love you. You represent low risk. You are going to qualify for much better insurance rates, lower interest rates, and seamless approvals. Interestingly enough, data shows that the average score for people in their 60s is around 752. So if you are in this age bracket, this is where your peers are hovering. Now that you know the numbers, let me address the biggest question keeping you up at night. Susie, how do I keep my score in that very good or exceptional range when I don't have a salary coming in anymore? You have to understand the ingredients that make up the score. Experian doesn't look at your bank account balance. They don't know how much money you have in your 401k or your IRA. They don't care if you're a multimillionaire or living paycheck to paycheck. Your credit score is entirely based on your debt behavior. Your actionable takeaway today is very simple, and I want you to promise me you will do this. Go to annualcreditreport.com or open a free Experian account. Pull your report. Look at your score and look at the ranges. If you are below 740, I want you to look at your utilization and your payment history. Clean up any errors. Do not let your financial guard down just because you retired. Your credit score is a reflection of your financial integrity, and it is a shield that protects your retirement savings from being wasted on high fees and inflated premiums. You have worked too hard, for too many years, to let a silly 3-digit number compromise your peace of mind. Know your score, protect your score, and stand in your financial power.